Welcome to the Smart Way Learning with AI. Bitcoin ETF. A Bitcoin ETF, exchange-traded fund, refers to an investment fund that tracks the price of Bitcoin and allows investors to buy and sell shares of the fund on traditional stock exchanges. Essentially, it offers a way for investors to gain exposure to Bitcoin without directly owning the digital currency itself. Here's how a Bitcoin ETF typically works. 1. Structure. A financial institution creates the ETF and holds a certain amount of actual Bitcoin as the underlying asset. 2. Share creation. The institution then issues shares of the ETF to the public, which represent ownership in the fund. These shares are tradable on stock exchanges like regular stocks. 3. Price tracking. The ETF's price is designed to closely track the price movements of Bitcoin. As the price of Bitcoin fluctuates, the ETF's price should correspondingly change. 4. Liquidity and accessibility. Investors can buy and sell shares of the Bitcoin ETF on the stock exchange throughout the trading day, making it more liquid and accessible compared to buying and holding actual Bitcoin on cryptocurrency exchanges. The introduction of a Bitcoin ETF has been highly anticipated in the financial world because it could provide a more regulated and mainstream way for traditional investors to invest in Bitcoin. By investing in the ETF, investors can gain exposure to Bitcoin's potential price appreciation without needing to set up a digital wallet or deal with the complexities of buying and securely storing actual Bitcoin. It is important to note that financial products and regulations can change, and new developments might have occurred after my last update. I recommend checking the latest news and consulting with a financial advisor to understand the current state of Bitcoin ETFs and their potential implications for your investment strategy. A Bitcoin ETF, exchange-traded fund, offers several potential benefits to investors and the broader market. Please note that developments might have occurred after my last update, so I recommend verifying the latest information before making investment decisions. Here are some potential benefits of a Bitcoin ETF. 1. Accessibility. A Bitcoin ETF provides a more accessible and user-friendly way for traditional investors to gain exposure to Bitcoin. Investors can buy and sell shares of the ETF on regular stock exchanges without the need to deal with cryptocurrency exchanges or set up digital wallets. 2. Regulation and oversight. Bitcoin ETFs are regulated financial products, subject to oversight by the relevant financial authorities. This can provide investors with a higher level of security and protection compared to dealing with unregulated cryptocurrency exchanges. 3. Liquidity. ETFs are generally more liquid than individual assets like Bitcoin, especially for large institutional investors. The ability to buy and sell ETF shares on stock exchanges throughout the trading day allows for greater flexibility in managing investments. 4. Diversification. Some Bitcoin ETFs may hold a diversified basket of cryptocurrencies, providing exposure to a broader range of digital assets rather than just Bitcoin. This can potentially spread risk across different cryptocurrencies. 5. Custodial services. Bitcoin ETFs often utilize secure and established custodial services to store the underlying Bitcoin holdings. These custodians employ sophisticated security measures to protect the assets from theft and hacking. 6. Mainstream adoption. The introduction of a Bitcoin ETF could contribute to greater mainstream adoption of cryptocurrencies. As traditional investors gain exposure to Bitcoin through regulated channels, it may lead to increased interest and acceptance in the broader financial community. 7. Tax efficiency. Investing in a Bitcoin ETF may offer tax advantages compared to holding and trading cryptocurrencies directly. The tax implications of ETF investments can vary depending on your jurisdiction and individual circumstances, so it's essential to consult with a tax advisor. Despite these potential benefits, it's important to recognize that investing in any financial product, including Bitcoin ETFs, carries inherent risks. Cryptocurrency markets can be highly volatile, and the value of an ETF can be influenced by various factors, including changes in the price of Bitcoin and the overall sentiment in the cryptocurrency space. As with any investment, it's crucial to conduct thorough research, understand the risks, and consider your risk tolerance and investment goals before making a decision. Always seek advice from a qualified financial advisor when considering investments.